Back with something a little bit different today. Just want to take a look at the difference between trading break and retest of support and resistance, or when you're actually taking market structure and market manipulations into account. This is actually a snip of a webinar that I did with a student. I've obviously added an overdub because I've had to condense it down. It was about an hour's worth of footage. So I've chopped it down, added some vocals over the top just to explain what's going on so that it actually makes sense. And I hope you can see the difference as well, to see that break and retest, support and resistance, that in itself is not a strategy. So let's jump into it. So this first one's using nothing but support and resistance with break and retest. You can clearly see we've got a level of resistance just above, level of support just below. Nice and impulsive, both of them. Student notices a break. We've got a break of that level, so we're going to be looking to sell based on a retest of that level itself. Bounce straight through the level doesn't mean anything. Same again, we've come back up above. Just here, we've taken out that level, so we're now looking to go long. Notice that there is obviously an upper wick stat just above as well. Taking that level out after the retest, we're now looking at this level to see that we've taken that out. So a retest of that level obviously means the price is supposedly going to continue to the upside. Both stop losses are now taken out. 3 for 3 losses in a row. Level is taken back out again. Noticing that we've got this level sat just below and our price is still actually pushing to the upside. Obviously those trades, or the first of that of those two trades, would have been alright, but we've come straight back through the level. It's bared no relevance after we've taken it out. Same again, another break and retest, another stop loss. We've broken the level, smashed straight back through, moved into a stop loss. We've now created this impulsive level just above, with a level just below us as well. We've obviously retested this level, so now we're looking to fill this gap. This trade goes okay, we've hit a take profit. We're now obviously moving into some sort of a range, just broken the top of that range. So converted that resistance now to support, break and retest again. We've pushed up, taken another take profit. Price is still pushing to the upside, creating more levels as we move forward. Another break and retest. Wait for the next level below to form. So there's our break and retest again. And we're looking to push to the upside. Broken straight through both of those levels. Not hit a stop loss just yet, but we've taken the stop loss now, and obviously in doing so we've broken another level. So seeing that we've got a break and retest, push down, we're now back at the top level of what was the range just a minute ago. So we're looking for a bounce. We've bounced, hit the next level of support just up, taken a stop loss. Now I'll stop this just for a second. This take profit has been marked where it is beyond this level, just based purely on the fact that it ties in with this level of resistance for whichever reason isn't marked up. But that's the reason why this take profit sat just here. As we can see, we've got multiple levels here now that we are breaking through and then smashing straight back through. So break and retest is just a complete waste of time. It's what everyone else is doing. So the banks know that that's what most people are doing. That's exactly why we see the break of these levels, and then as we retest, we're just pushing straight back through again. So obviously here we've got a bounce on a level of support. We're then converting it, looking to potentially sell, and we punch straight back through again. Just here, break and retest, hit a take profit with a very poor risk reward ratio, it must be said, but it needs to be able to take into account the levels that are above and beyond, because all that's being used to find stop losses is support and resistance. Same again, we've got our break just here. We've pulled back up for our retest. We've then started to move away using the next level of support as our take profit, and the level means next to nothing. We've smashed straight back through and hit another stop loss. All in all, quite a few trades, quite a few stop losses, a few take profits. Ta-da! Now we move into the way that I'll trade. Obviously, this is easy with hindsight. We're able to see that you've got both sets of data marked up. This has been done through backtesting. It's not been done through real time. But any TP student will vouch for the fact that what comes in a minute, so the way that these trade setups are marked up, is exactly the way that I teach. It's exactly the way that I trade. It's exactly the same as the stuff that's marked up in the vault. So now, obviously, support and resistance is an important component of trading. It is something that we need to take into account, but I'm not teaching people that we're looking to trade a simple break and retest. Break and retest of support and resistance isn't a trading strategy. So we're going to be looking to identify market structure, look to see if we can find any market manipulations, and see if there's also any patterns that are forming as well. So moving into the same data, we can see again we've got the push to the upside. We've obviously got these levels of support and resistance that were marked out in the first setup, but they're not necessarily what I would deem to be trading opportunities. I'm more interested to see if we've got any structures forming, which, as we can see here, we've got an ascending manipulation. The MACD just down here, you can't really see it because the Zoom recording cut it off, but you can see we've definitely got divergence across our histogram through these three highs in this push to the upside. So we're obviously looking for some form of a break of structure. We've also got this key level sat just below, so we know that if we get the break of structure and we also get the break of that level, now if we're looking for a break and retest, we're not just trading the break and retest of a level of support or resistance, we're looking at a break of market structure. Two completely different things there. We've got our targets just above the 1618, so we're not pushing our luck, and our stop loss clearing the structure as well. So there's the first trade taken. Also potentially seeing that there's some kind of trend moving, so we can see that the price is obviously pushing to the upside, and we're seeing this series of higher lows and higher highs form. At the moment, that doesn't necessarily mean too much, and we're unable to get a parallel channel over it because there's just purely not enough data, and it doesn't sit parallel anyway. Now looking at this smaller structure, we've got kind of like a micro channel starting to form. In an ideal scenario, we'd be able to jump into a lower time frame and see exactly what's going on, make sure our channel center's got some form of relevance, and want to be able to see that really kind of clear, clean wave formation throughout this channel forming. We can also then confirm its weakness with divergence. But we can see that we're getting this push to the upside, and another touch to the top of this channel is likely to lead to us thinking that we've potentially got some kind of parallel structure then at the top, because that's going to give us two highs to be able to play with instead of just the one that we've got at the moment. So the microstructure goes in place. We can then see just above that we're potentially starting to see these two highs link, and I want to see that that extends to this low where the push started, right where the video begun. So we get a level across. I then want to see if a parallel channel is going to fit. And this is not about manipulating or trying to pretend we can see something we can't. It's about now trying to see where this lower level is likely to sit. Because as we say, we can see that we're in an upward trend. We can see that we're getting these series of higher highs and higher lows. So we now want to be able to try and see where this low or this higher low is going to form. And it's not about trying to predict that so we can catch a bounce or try and hope that we can see where it is. It's because we want these ascending structures to be able to look for the real kind of trade at the end of this move. It's very similar to what we're getting here in this micro channel, in which we've got an extremely bearish, a bearish engulfer actually, which I would have my own dedicated strategy, which is in the vault, as to how I would trade this bearish engulfing candle. But for the purposes of this, it was just taken using the channel. As we'll see, we've got a break of this micro channel structure, and we're looking for the retest of this structure to be able to look for shorts. We got our break, we got our retest, we push down to our 1618. And we can see a double bottom like structure with quite a lot of liquidity sat in that neckline. A break of that liquidity likely to give us a push back to the upside, maybe move to the top of the channel, once again allowing us to confirm the channel top. We know we've got this level of resistance just here. As I say, we're not interested in taking a trade based on the fact that we've just got a level of support and resistance. There's no way to clearly define a target unless you're just going to trade to the next level. And there's no way to find a stop loss unless you're just going to use the next level beyond. Price is now slowly starting to move sideways. Looking to see if this channel bottom, we've got a clear rejection just here. We've got a very strong pin bar candle that's formed. We wanted to see if we could line up the bottom of this channel with this rejection. So remember, we're always looking to include the wicks in those lead levels. This obviously being ascending means that our lead level is going to be at the bottom. So we want to make sure that we get this rejection. Another pin bar with a high liquidity close means we're likely looking to carry this long. We've got this level just above, but we can see we've also got a trend. So a break of that structure is likely to push us to the top of the channel. So not only giving us a decent trade, but also allowing us to confirm this move. We've now got a level of support just beneath us as well, and we get a big rejection. Once again, you can see just here, this level that's marked out, this level of resistance that we've got marked just here, we get a break, we get a retest, and the price is just bumbling around. So you're never going to be able to get a clean, clear entry based on a break and retest of support and resistance, because we get this choppy price action form around these levels. So ideally, you either want to already be in a trade or you want to be looking for something else, because everyone else is just looking for this level, break, retest, take the trade, and that's exactly why we see this. Price action appears to be moving into a flag of sorts, but there's no real impulsive flagpole that would allow us to take this as a trade. And just here I'm marking up and just saying that we can see now a clear structure of each consecutive higher high forming, and we can also see across our MACD that we are actually getting relatively strong divergence through this push to the upside. So it's all well and good looking for break and retest of each level as we push higher and higher, but actually we can see that the higher this price is pushing up, the more it wants to come down. Price action's also now weakening. We can see we've gone from these really strong impulsive bullish moves as we're pushing up with each wave to now becoming much more indecisive. Our candles are getting much smaller, much more wicky. Our MACD's confirming that this push to the upside is actually starting to weaken. So we're just looking to see if there's any form of confirmation. We can now look to see where our channel top sits. And this is just explaining the divergence to show that we've got this push to the upside, but actually it's not got too much strength. We've got a punch out at the top. Not really too bothered by that because our MACD is already showing us that this is likely to be a fake out of a level. Want to see if we can get an impulsive rejection down below. There's our rejection below, potentially seeing that we've now got a double top, and in having a double top, that would potentially then push us to the bottom of the channel. So we'd want to see if we've got targets that can tie in. Obviously, we need to break that level first. There's our break. There's our retest of the structure. So now we're just looking to see, is there any way that our targets are going to give a confluence of sitting at that channel bottom, which they obviously do. Get our position indicator in place. There's our entry. And we then push down beautifully to the 1618 of that double top, which is sat within this channel itself. So we're able to identify clearly which direction the pair is. We've now got our third rejection of the channel bottom, confirming that this structure is actually here and it is in play. Just then that was saying that we're likely to, the arrows that were drawn on, from this point, the price is only realistically going to be looking to do two things. And that is, we can either look for longs down here in a lower time frame, or we can look for some form of a continuation in terms of getting a direct break of the bottom of this structure from here. Obviously, then we look for the retest of the structure and we see that it moves away. Or we're going to confirm this rejection at the bottom of this channel and our price is likely to push up. 95% of the time, we're going to see that our channel center, hence exactly why I have this dotted line in my channels, we're going to see that this channel center is going to play a relevant part in the formation of the channel. So if you're struggling to find where these channels should be sat, marking up the channel center is going to help you to be able to see whether what you're looking at and marking up is relevant. So if we can get a push up to the channel center, it's going to do numerous things. First of all, we're confirming this bottom structure. The more confirmations we get, the higher the probability is that when we reapproach this structure from the other side, it's going to hold. Secondly, it's going to help us confirm that structure further by getting a rejection of the channel center. It's also going to allow us to flip to a lower time frame. Obviously can't do that through backtesting purposes, but it's going to allow us to flip to a lower time frame and see if we can get a confirmed rejection or continuation of this channel center. Price is punched up to the channel center and appears to be rejecting. So now what we want to do is see if we get this break of this structure, where is this likely to move us to? Where are our targets going to be for the break of this structure itself? So this ascending channel, where are we likely to move to? Looks unrealistic. This is the power of channels. There's our break. Notice the relevance of that one level fib extension. When our price punches to that one level extension, we get this double rejection, and then we're appearing to move into a channel. Wanted to get this third tap just here to confirm that we're getting this ascending channel. Now, a lot of people, if you're trading break and retest and you were looking to short this price pushing back to the upside, that's where most people panic because they're seeing less profit than they were beforehand. However, if we're able to identify these structures, once again, confirm on the MACD that with each push to the upside, we are actually seeing a weakening. This isn't something to be fearful of. This is something to actually look to potentially take another trade based on. We want to get that break and retest. Seen the break and retest. Then we get targets marked up. Notice the relevance again of the 1 and the 1618 of this smaller structure. That channel's been taken, so we've entered another trade based on the smaller channel. And we've traded to the targets that are the same as the first structure break, giving a slight tolerance to the 1618, never pushing our luck and making sure we've got confidence in these, but we can see the relevance just here of this 1618. Price pumps down, both take profits are taken, push directly through the 1618, and we can see the difference. Much less trades taken, but the trades themselves are much more concise. They're much clearer. We know exactly what we want to do. We know exactly what we're looking to achieve. We're not just taking it based off the break of a level or the break of a line. We have a clear understanding of direction. We know where our volumes are sitting in terms of our MACD, so we know what is manipulation, what's genuine trend move, and we know exactly what we want to achieve with each trade that we are taking. Clear and concise targets, clear and concise stop losses. This is a completely different ball game to just trading support and resistance. Support and resistance, break and retest of support and resistance is a complete waste of time. Jump on our website and check out Pips Hub. It's completely free for everyone. www.tpfx.co.uk. Click Pips Hub, have a look through the content. Let us know what you want to see more.